up the space in this niche are offering their products at exorbitant interest rates, usually averaging between 4.5% per month and about 5% per month, and generally going to about 54% per annum, Mr. Speaker. Therefore, placing the borrowers at a great disadvantage. Needless to say, Mr. Speaker, these exorbitant interest rates, in light of the prevailing economic conditions, result into default on payments and repossession of the buckling collateral assets. With statistics showing, actually, Mr. Speaker, that the repossession rate of motorbikes in our country today stands at an approximate number of 50%. Mr. Speaker, the repossession of collateral assets, especially in cases where at least 30% of the value of the assets have been paid up, is an extremely punitive remedy, and since asset-based microlending companies operate in a limited regulatory space, recourse for the borrower is limited, leaving a majority of struggling Kenyans today at a loss when they lose their assets. Mr. Speaker, these high interest rate loans and the punitive remedies on default only exacerbate the unemployment challenge in the country by significantly reducing net revenues to businesses and leading to closure of businesses in extreme cases, with the end result being that the borrowers get trapped in a vicious circle of poverty, Mr. Speaker. And Mr. Speaker, there's need to protect the average Kenyans that find themselves in such situations of exploitation, to align the underlying contracts to the exigencies of the state and to ethical norms. I note, Mr. Speaker, with concern that the strides made in the regulation of microlenders with the enactment of the Central Bank Amendment Act of 2021 only empowered the central bank to regulate digital credit providers. Mr. Speaker, sir, Chapter 4 of the Constitution of Kenya, 2010, provides for the Bill of Rights for every Kenyan, and for some of those rights include the right to human dignity. Under Article 28, the right not to have their possessions seized, and the right to information necessary for them to gain full benefit from goods and services provided within our borders. Mr. Speaker, Amendment number 9 of 2006 of the Kenya Banking Act introduced the independent rule into Kenyan legislation, which provides that the sum of the interest and the legal costs in respect of the outstanding debt may not exceed the initial capital amount of the contract. If the